Well, welcome back to the show, everyone. And we have a very special guest today. His name is Mansour Dia. Mansour is currently the investor at Langdon Equity Partners. He joined in 2022, actually at the inception, at the start of Langdon Equity Partners, as an investor. Previously, Mansour was at Constellation Software, so we're going to get the inner workings of Constellation as well. Mansour, thank you very much for joining us today.
Yeah, thanks for having me. Pleasure to be here.
Awesome. So I've never talked to an ex-employee, honestly, from Constellation Software, and I would love to know your experience there. You were an M&A and corp dev analyst.
Yep.
What was it like?
Yeah, so it was fascinating because I was also an admirer of Constellation Software being at Black Creek Investment Management previously, so in public markets. And so part of the reason why I was interested in joining that opportunity was because I wanted to see those inner workings of, I thought, what was the best compounding machine out there. And so I jumped on the opportunity, and basically for the first weeks, they show you a book of best practices built by different business units and operating groups in terms of what does the best sales and marketing ratios look like? What does best in class software company look? What do the best in class software companies look like? And so being able to do that and then also ask questions directly to people who have operated and acquired these companies was just incredible. And I'm happy to go in any direction in terms of the inner workings of Constellation, how the teams are structured, how we thought about deals. I guess maybe one thing that really surprised me from my first day there was we were looking at a deal, and so the team was sharing the model live on Teams, and I just couldn't believe the multiples that I was seeing in terms of what they pay for these software companies. I thought there's surely a mistake here. And so when they asked me, like, Mansour, what do you think about this? I gave a really bad answer, and I said, we should definitely do this deal if we can pay this price and get this IRR. And so we went on and talked about more real world business decision making rather than numbers, but I just couldn't believe the multiples that Constellation was able to pay for these very high quality cash flow generating companies.
That's amazing. And so, why are they able to continually buy these companies at those multiples? What's the
I
secret?
think I think there are a lot of reasons. I
Hmm.
think a lot of these companies are worth those multiples. I think one aspect that's underrated about Constellation Software is how good they are at structuring deals. A lot of the times, it's companies that may have really high customer concentration or some risk of a lawsuit or code written in language that only one or two people can still write in. And so structuring the SPA or share purchase agreement around these risks is something that also protects the downside tremendously, in addition to the multiple. And then also the relationship building. So about 25% of my time was spent just reaching out to software executives, making sure that I maintain those relationships. And I'm not sure if people know that, but you're pretty incentivized to make sure that you have your coverage that's pretty solid in terms of the number of companies that are assigned to you that you maintain close contact with.
Interesting. Yeah.
And so anytime that someone is selling, basically I'm there if it's a relationship that I have. I also know what the trigger points are. And then a lot of the times those trigger points are not people trying to maximize for value. Like there was a software company located in Sweden, still there, still hasn't been acquired. And the owner and the seller potentially basically had a number in mind. Like his dream was to go to Croatia, go sailing, and if you give him 5 million euros, and he's happy. And so just wait for the right time, and that's that. And then there's other times where it's the classic. I promised my wife that I was going to retire 3 years ago. Now it's the time, and so they're not really thinking about IRR and valuations. So there's that, and then I think the last aspect would be probably the fact that Constellation has amassed over the years such an extensive database of what's possible within software in terms of like margins, in terms of even increasing pricing, in terms of working capital terms, that if you're someone who started a business even like 15, 20 years ago, you don't have the data, right? So you don't recognize the value within the asset that you have. And so it's hard sometimes when you see these sellers still operating those companies a lot of the times. And then the price increase is being implemented, and they said, "Wow, like I was sitting on all these cash flow for all these years, and you're trying to tell me that we just raised the price 30% and we lost no customers." It's just pretty remarkable.
Absolutely. So let's hear more about the team structure and what your focus was at Constellation.
Yeah, so what's also super interesting is almost every team is structured differently.
Hmm.
There's a lot of experimentation going on within Constellation Software. And so I was part of a team within Fog Software that's part of Vela Software. And so within my team, we did both BD, so business development, reaching out to companies, maintaining relationships, and M&A. So the whole like writing NDAs, and then modeling companies, making deal propositions, etc. Integration. So my team was able to do both. I initially was focused on the auto aftermarkets vertical, so things like automotive tire shop software, things like that. But over time, just because valuations were way too high, we just looked at everything, which was a lot of fun. And then I had colleagues who were looking at other sub verticals like textiles, apparel, things of that nature.
Yeah, like, how does Constellation build that vast, robust database of potential acquisition targets?
So
What are all the data
Constellation
sources? Yeah.
Constellation uses Salesforce as a centralized database.
Hmm.
And so part of the role is during your downtime, just looking at competitors and just looking to add them. On the first page of Salesforce, maybe I'm saying too much, but on the first page of that Salesforce, there's a list of the top 5 or top 10 people who've added the most companies. At the end of every week, we would get an email from the senior team at Fog or Vela to talk about that showed reports in terms of how many companies have people reached out to, how many of those have transferred and converted into a meaningful conversation.
Mm.
And there's just so much data from even like a reach out perspective. And that's also how they think about hiring people.
Hmm.
So you start with the conversion number from LOI to SPA to purchase price, and then going backwards from reaching out to an NDA and from reaching out to having a meaningful conversation. Then you can get a sense for how many people do you need on your BD team to actually do all those reach outs
Hmm.
to be able to deploy a certain amount of capital.
Hmm.
So if you want to deploy 100% plus of your free cash flow, then you can kind of hire in advance. And so you would know that Topicus is a company that we own, and I personally track the hires that they do.
Hmm.
So it's been a pretty good leading indicator in terms of what countries do they hire like M&A and BD people into.
That's super interesting. And what was the deal playbook like then? Like, what were the characteristics of companies, the commonalities that Constellation would acquire?
So there's a sweet spot,
Hmm.
but I would say there's a lot of variation.
Hmm.
So sweet spot would be really high, like 80% plus recurring revenues, extremely low churn, like below 10% real churn. So
Hmm.
people calculate it differently. Constellation took into account not only the people, like the customers that churn to zero, but also existing customers that churn like down. So if you went from like $1,000 per year using the software to 800, that would also count towards the churn. So those would be typical characteristics. Usually, it would be companies that had thin profitability, and yeah, extremely sticky, not a lot of customer concentration. So that would be like the perfect setup. But when you have a growing cash flow base and you're trying to redeploy 100% of it, then you can be, I guess, a little bit more creative around what you're willing to acquire. So maybe less recurring revenues, maybe more functional integrations with things that you already own, maybe a different country, maybe really old software. But like I said earlier, you structure around a way that you really protect your downside. It's
Hmm.
really, really hard to do a bad deal at Constellation. They
Hmm.
make it almost mathematically impossible to do a bad deal.
That's amazing. That's the secret sauce. What was your proudest moment being at Constellation Software?
Oh, that's an interesting question.
Yeah.
My proudest moment. Um, One was probably an opportunity I had to work on an initiative,
Hmm.
which is Constellation's way of talking about organic growth. So I was working with the CEO of a business unit that we owned in Australia. And so they had a really large customer that was interested in building a managed service practice for all of the locations that they had. And so just talking to him one on one and being able to model what he was talking about, but also providing feedback to him was a very proud moment. And just going back to what I said first, the first time I saw a model like Constellation, and my initial thought was strictly into the numbers and talking about this IRR looks great and those margins are amazing and the purchase price is low. We should buy. To being able to have like this higher level, like deeper business level conversation and thinking about, how exactly are we going to scale this new initiative? How much is it going to cost? How are we going to incentivize the people? What about the timing of it? How is the senior person going to feel about managing all these new people? Is there, et cetera, et cetera. So that was, I was pretty proud of that moment. I still think about it sometimes.
This is great. Did you ever meet the big guy, Mark Leonard?
I met him after.
Yeah.
I met him afterwards in person. I actually have sent him quite a lot of emails when I was at Constellation. One of which was just being interested in the HPCs, high performing conglomerates that he studies. I was just asked to receive all the documents that I could. I just love learning about companies and compounding machines. So there's that, and then the other one was rumors that he was thinking about starting something outside of vertical software and experimenting. And so I just volunteered and I raised my hand and I said, I'd love to be part of that journey with you and just, look for things that make a lot of sense. He replied. He told me what he was looking at, how he was thinking about structuring that, which is once again like really thoughtful about protecting the downside and not losing any money. But yeah, unfortunately, things just stopped there.
Okay. Is this separate company ever going to launch, do you think? Or is it just a
Um,
dream
I don't think
that he
so.
shelved? Yeah.
I don't think anytime soon. So I think the runway is a lot longer
Mm-hmm.
than people appreciate.
Mm-hmm.
That even internally, like at Constellation, we might have appreciated. If you think about even a company like Topicus today, given their size, still 60% of the revenues are in the Netherlands, which is a country of 17 million people.
Mm-hmm.
And they're expanding into more countries, more geographies. And so the runway is just massive and it keeps increasing as well. It's a growing market in terms of number of vertical software companies out there.
Have you ever contacted Mark's son Damien at Pine Tree Capital
Yeah.
to see what he's doing there? Yeah.
Yeah, I have. We've had a call, I think last year, a year and a half ago,
Mm-hmm.
just talking about different software ideas within small cap.
Very interesting. Okay, so you built out a very interesting network of investors, of fellow tech investors. Um, how did the opportunity come about to join Langdon Partners at its inception?
Yeah, so from university, I guess I had been interested in either starting up my own, what I called investment vehicle, or joining one that I thought was very interesting.
Mm-hmm.
And actually, during my time at Black Creek Investment Management, I had a meeting with the chairman of that company, and he had said, like, if we could start a strategy, like a new strategy today, what would it be? And I said at the time, I would be super interested in smaller companies, high returns on capital, really high quality, concentrated portfolio. So that's my personal approach, personal philosophy in terms of what I think makes sense to be able to compound in public markets for a long time at really attractive rates of returns. And so I was coming back from a friend's wedding in Montreal and just bored on the train, scrolling down LinkedIn, and one of my friends liked a job posting that was very obscure, that only had 4 words in the requirements: demonstrated passion for investing,
Mm-hmm.
posted by a certain Greg Dean that I had never heard of, from Langdon Equity Partners, with no website, no logo, nothing, no pages. And so there was an article that said that Pinnacle Investment Management in Australia had seeded Langdon Equity Partners, but that was behind a paywall. It was like $12 or something, and I just didn't want to pay for it. So I reached out to Greg directly on LinkedIn, and he didn't reply at first. I followed up a couple of times, and he said, I'm getting hundreds of applications, and just, send me an email explaining how you have some demonstrated passion for investing and why you're interested in talking to me. So I mentioned a book that I had written on investing,
Mm-hmm.
Investing 101, Timeless Principles for Investing in very plain English.
Mm-hmm.
And so I think a couple of days after, we had a Zoom call, and Greg showed me the book. He was like, I don't think you wrote this. So he kind of grilled me on the book. We had a really great conversation. We then ended up going for breakfast. Breakfast became lunch.
Mm-hmm.
I thought I had the job then. But then I ended up meeting with the rest of the team. So 2 of the team members at Cambridge, Isaac and Alex, had joined over. And so I met them, presented a company to them, and was just a great conversation. More than an interview, just great conversation. And that's how things happen.
Well, that's just awesome. And then at Langdon Equity Partners, you are focused on Europe and
Yes.
specifically tech small cap within Europe. And you've carried over Topicus. Topicus is one of your positions, of course, coming from Constellation Software. So tell us about Topicus and what makes it so special.
Yeah, so I think everything that makes Constellation special applies. But the other reason that Mark Leonard at the time was interested in that transaction is because of the track record of organic growth. You hear very frequently that the U.S. innovates, that China replicates, and that Europe regulates. There's a lot of truth to that, but Topicus has just found ways to be able to grow around those regulations. So a new regulation typically means a new opportunity, for one. And then number two is just building that culture of building new products and going out there and selling in that organic growth. One of the learnings that I've had is the best way to improve organic growth is to just acquire companies that have been growing organically. It's really hard to acquire companies that have never grown organically and just expect that it's going to come from that reason. The other aspect is, for example, I cover Europe, which is a region, but it's a super fragmented region, and so going there without that on the ground mentality and on the ground understanding of the differences is also extremely hard for anyone to go out there and copy. So even from personal experience, when I was at Constellation, it was extremely hard to get any calls with like German vertical software, with European vertical software companies in general. But for some reason, Germany was just much tougher. But if you're there in person and you have those relationships, you speak the languages, it just makes it a lot easier. So I think all that makes Topicus quite special. And then there's always a question around the runway, etc. But like we said earlier, I think it's longer than a lot of people imagine.
Yeah, we discussed before the podcast. There's a hashtag going around like "Never Europe," right? I
Yes.
don't think most investors think about Europe. They think about U.S. first. If they're in Canada, if they're a Canadian citizen, Canadian small cap, micro cap companies. But very seldom do people ever go out into Europe. Tell us about the opportunities that you see in Europe.
Yeah, so Europe is actually the highest weight in the portfolio, just because of the number of opportunities we see.
Hmm.
But if I zoom in even more, there's no country in Europe where we hold more than two companies. So super fragmented in terms of countries, but also in terms of opportunities. And so we're organized by region at Langdon. So
Hmm.
Isaac covers the US, Joel covers the UK and Canada, Alex covers Asia Pacific, so mostly Japan, Australia. And so when Greg basically said, I think it makes sense for you to cover Europe for several reasons. My first reaction was almost, what you would expect. Like, it's a market that's not really growing. I don't really know about the companies out there. Has anyone really created a lot of value investing in European small caps? A lot of the times in small caps, companies are small, but for a great reason. Markets are small, or they're just not structured, or the management team doesn't have that ambition to go overseas or conquer other markets, make acquisitions. And so I was pretty apprehensive, but just given the number of companies out there, you always find these gems. And so I think the Never Europe hashtag is great for me, great for Langdon, great for our clients because of the number of opportunities that we're seeing and no one's looking. Like a lot of the times we see great businesses in the US, huge market, but the exact same company that may be headquartered in France and might have 60% of the revenues in the US, which was the case for a software company that we own that's in the process of getting acquired called Esker, just so happened to be headquartered near Lyon in France. 60% of sales in the US, sales in the UK, in Asia, but he trades at half or even less of the multiple of companies in the US, growing as fast, more profitable, great management team, still founder-led. And so we see a lot of opportunities like that. You just got to be willing to take a lot of meetings. A lot of those companies won't screen very obviously, but that's the opportunity.
Yep. If you were to pick three countries in Europe, which ones have the best small cap tech companies in your opinion?
Okay, Sweden would be one.
Okay.
That's an easy one. Another one would be, if I could pick three countries in Europe, it really depends. So I don't really think about them in terms of country. I always go company by company. I was recently in Finland, and part of the reason is because I just thought the coverage that we have on the watch list wasn't extensive enough.
Hmm.
The other reason is we have identified that a lot of Swedish companies almost go to Finland to die in the sense that they just happen to have much lower margins when they go there. And I just haven't gotten a good answer as to why. And
Yeah.
so I just decided to go there and see for myself. I don't think I have a great reason yet. I think I'm getting there. I've asked everybody, but no real answer yet.
What are your early theories that
Early
you think is,
theory is
yeah.
that culturally, it's just very different. The way, even the meetings that I have with companies in Sweden, companies in Finland, I find people in Finland being a lot more direct. And
Hmm.
so a lot of the execs in Finland that work with others in the Nordics or across Europe tell me that they often have to adapt how they speak, how they communicate during
Yeah.
like management meetings internally, because they have no fear in terms of telling you like this is completely wrong. Yes, we're absolutely in a turnaround right now, as opposed to weaving their way into an answer, which I really appreciate as an investor. It makes life a lot easier when a lot more things are at face value. So that's one aspect. What I've heard from people there is a lot of the times, a lot other countries will come there saying, "Oh, it's a smaller market. We know a lot better," and so they come with some form of arrogance. And
Hmm.
for a lot of people locally, they see working for someone who's not from Finland as not as attractive
Hmm.
if they come with that sort of arrogance. So those would be more anecdotes that I've heard from the ground, but nothing that I can really pinpoint to. But a lot of companies there generate incredible margins, are growing really fast, and for historical reasons, given how small they are, how isolated, are also great at exporting, and so have a lot of sales overseas and in different countries in Europe.
Interesting. And you're very quick to say, Sweden's number one for small cap tech. The population of Sweden, I believe, is lower than the population of Ontario, Canada. So
Yeah.
what's going on in Sweden?
Yeah, so a lot of things. One of the things that I actually had a lot of fun building is a software universe
Hmm.
tracker.
Oh,
So,
cool.
so trying to do similar to what Constellation had, like 30 plus years of data across different metrics for software companies of a certain size. Trying to do the same thing within public markets, globally within our universe. And so, one of the very interesting things that I realized was one of my metrics is the size in revenue at which a company became profitable.
Mm.
A lot of the times we have meetings with US companies and they're like $300 million in sales and they say, oh, we're still scaling, our unit economics are amazing. And when we get to scale, although they're $300 million in sales, then we'll be a 40% margin business. But then I came across like a lot of European companies that just so happen to be extremely profitable at €1 million in
Wow.
sales, €5 million in sales, 20-30% margins. I think there are some structural reasons why
Hmm.
and cultural reasons why. For one, I think just the VC funding space not being as prevalent in a lot of those countries. And so by default, entrepreneurs have to be bootstrapped and extremely profitable, grow from internal cash flows being one. I think the other aspect is a lot of these firms don't have the luxury to think that their market is just massive. Like having slides with like their TAM being, $1 trillion or always much higher than what it actually is in reality.
Yeah.
You're constrained by oftentimes language, by
Hmm.
where your sales employee can sell. Software doesn't always travel super well across borders. And so you're constrained to think about being very profitable very early on. And so a lot of the times, even the way in which you incentivize your sales team in the US versus in a lot of countries in Europe is very different. You also rarely see a lot of stock-based compensation for software
Mm.
companies. If you look at the average salary of an R&D engineer in Stockholm or in Gothenburg, for example, in Sweden, significantly lower than it would be in Ontario and certainly in California. So if you're a software company based in Lyon, France, for example, that Esker I was talking about earlier, most of their R&D team sits in Lyon, France, not even in Paris, and not
Mm.
even in Lyon actually. It's in a smaller town called Villeurbanne. So salary is even lower. Yet 60% of your sales are in the US to companies that have between 500 million to $5 billion USD in revenues. And so you kind of have a labor arbitrage in a way, but also you're structured to have a cost that's just a lot more scalable a lot of the times. yet you trade at a multiple that's, half of what you would be in the US.
That's really interesting. I'd love to see that stock universe map when you're done.
Yeah.
And speaking of the universe, you do a lot of traveling for Langdon Equity Partners, and I think the other investors do too. But for you, you travel throughout Europe. I believe yearly Langdon sets a goal to have 500 meetings per year. What does that mean to you? Like, how many countries did you travel to in 2024? How many people did you meet?
Yeah. So it's about 400 to 500 meetings a year. We say we meet the S&P 500 every year, and it's always 500 new companies. We
Wow.
do a lot of trade shows, meeting a lot of competitors, suppliers, the whole thing, ex-employees, which wouldn't count in there. But the other thing that I think is quite different is that everyone on the investment team has a minimum travel budget, just to
Mm.
make sure that we're going out there, going underground, and doing
I
what
love
we
that
have to.
minimum, not a
Minimum travel
maximum,
budget.
but a minimum. Yeah.
Exactly. Because otherwise, at the end of the year, Greg's like, "What have you been doing all year?" Because I guess it's underlined by the fact that we want to trust the management teams, but we also want to verify independently.
Hmm.
And then the other aspect is you could build the best financial model ever, like looking amazing and etc. But you're doing a lot of prediction. We want to be in the world of observation as opposed to prediction. And it's only possible if you go there and really immerse yourself in the DNA of the company. If you really spend a lot of time with the customers, really understand the pain points, the value proposition, and depending on the case, you may want to access the sales team to see exactly what the day-to-day looks like, and how they're able to hook customers and are they really able to cross-sell, upsell, etc. And so, in terms of countries I've been to in 2024, I've been to the UK for a conference there with a lot of European companies. I've been to a few cities in Germany, been to a couple of cities in Italy. I think I drove 1,200 kilometers around,
Oh,
something like that.
wow.
Um,
Yeah, that's
I,
fun.
I
That's
drove
that's a
very
great
quickly
aspect of the
to.
job. Yeah.
Yeah, it's a lot of fun because
Yeah.
you also get to see local realities.
Yes.
That's something that you can't really appreciate from here. I say oftentimes, like imagine someone sitting in small town Sweden saying, "I'm going to invest in Tim Hortons. It's the next best thing in the world." And so unless you're there locally and really understand how things are, it's
Yeah.
just a lot harder. And then there are a lot of local small town idiosyncrasies as well that are very interesting. Like a small town in Italy that's very specialized in yacht engineers, for example, and has the whole
Mm.
supply chain when it comes to yacht manufacturing. It's not something that's on our watch list, but nonetheless, you learn a lot of things by doing that work on the ground.
Yeah, and just by us living in North America, we have two major news sources, right, for financial markets. We have CNBC and BNN, and very seldom do they ever bring up a European company. So you are building a real edge by doing all this primary research and meeting all these companies and
Yeah.
CEOs. So how did you then discover the company that you just told me about? I had no idea existed, called Chapters Group. Was that through traveling, word of mouth? What was the discovery process?
Yeah, so that one was actually one of my colleagues, Isaac, who sent me
Mm.
very late at night. He said, "I have a company for you that you're going to love." So it was actually a podcast with the current CEO. I would consider him the founder, Jan Hendrik Moore. And so I call it the least obvious compounder in the portfolio. We like to say that we own a collection of non-obvious compounders, because one of the things that I think makes Langdon different is that we don't screen on output. So although our universe is massive, just given that we look at small caps, and most of the companies in the stock market are smaller
Mhm.
and global. The easiest way to go around doing that is just to screen on returns on capital, PE ratios, and insider ownerships and things like that.
Mhm.
But it works well. But what ends up happening is you own a collection of more obvious compounders that are usually at a higher valuation, all else being equal. And so by taking a lot of meetings, you're able to identify companies that don't screen well at all. And just by being open-minded, companies that don't screen well at all, but that are building something very interesting underlying. And that's exactly the case for Chapters Group. And if I take a step back and I tell you there's a financials company trading at 10 times revenues, they have never made a penny in earnings and probably won't for a very, very long time. The share count has 10x over the last 10 years. They continuously issue shares. And the average age at the management team is probably 35 years old.
Most astute investors would probably say no thanks and walk away.
Absolutely. There's no reason why you would want to pursue and spend all your time, especially if you're looking at small cap and there are thousands of companies. Like return on time is extremely important, and so that's simply a quick no. And so that's the value in taking a lot of meetings and really digging behind what happened. And so Chapters Group is super interesting. So the company today is an acquirer of vertical software businesses, but I'd like to go back a little bit in history. And so the current CEO used to be a portfolio manager, very young portfolio manager in Germany, very successful in doing so. And so one of the companies that he owned in his portfolio was called Medical Columbus. Medical Columbus was a healthcare software company that ended up being acquired. And I think at the time he owned something like 30% of the company. But he got acquired in an asset deal. And so the acquirer only got the IP, and what was left was basically a listed entity with a pile of cash, a blank canvas, permanent capital vehicle that he could do something with. And so in parallel to that asset, that newly available permanent capital asset, he had also a company in the UK, still a listed company, he owns 30% of it today, called Software Circle. And in the first iteration of Software Circle, it was basically printing press businesses that he joined the board of at the age of 26, I believe. And within a week or two, he had replaced the chairman of the board. He had changed the strategy to being more acquisitive. And that strategy hadn't worked as well as they had expected. And they had pivoted to doing vertical software acquisitions, I believe in late 2022. And so he already had done that previously at Software Circle. And so the idea of Chapters Group, which was renamed in 2023, is almost like a Constellation Software in the sense that they do vertical software. But I think the similarities stop there. So it's almost more like a Pinnacle Investment Management, another listed company that owns a minority in Langdon. And so business model there is, let's say you and I go in and tell Jan, the CEO of Chapters Group, that we're interested in starting up our own platform, as they call it, in Canada. So we want to go out there and just acquire a bunch of vertical software businesses. They would own 80% of our platform. We'd have 20% equity. We would write a check, own 20% of the equity. They would provide deal flow. They would provide capital to which we have to return at least 10% of. And they would provide us enough money to have travel budgets, working capital, an office, etc. And so that's the company today. They have made a lot of acquisitions. They've raised capital from Mitch Rales, the founder of Danaher, Daniel X Capital, Daniel X Family Office, Thorndike. So they have a pretty cool cap table, and just focus on making incredible acquisitions within vertical software. They tend to buy more like faster growing companies than Constellation Software. They also tend to cluster a little bit more in terms of buying companies within the same space, same vertical, and extract more synergies from doing that. More recently, they've hired someone who was at Valeris as their chief operating officer. And part of his role is going to be building what they call the manuscript. So the idea behind the manuscript is almost like building a best practice book for the next people to come in and make acquisitions and operate those software companies at the highest level possible.
Sounds very Constellation Software-esque, right? From your experience. That's super interesting. What's the market cap right now of Chapters Group?
I think the market cap is around 800 million euros.
Okay.
It's grown pretty fast.
Yeah, and what was the primary driver of that 10x
In the share count?
return? Yeah.
Yeah, so part of that was just establishing the new platform, Chapters Group.
Yeah.
And over time, they have, I guess, needed capital to do continuously more acquisitions.
Okay.
They're just extremely thoughtful in terms of how they think about diluting, issuing more shares. The other reason, one of the things I mentioned is they haven't made a penny in earnings. So that's accounting earnings. And so at Langdon, cash flow is our North Star. So we think about cash flow more than we look at earnings. And so according to German accounting, you have to amortize goodwill from acquisitions. And given how acquisitive they've been, there's obviously no earnings if you don't do any of those adjustments. So there are some other idiosyncrasies. For example, the timing of acquisitions, when you book it versus when you get the full benefits and the full revenues. But when you work it out, they've generated pretty high returns on capital and returns on equity. And I
And
guess
then,
that's the other advantage of looking at companies within the same geography, just
mhm,
getting more acquainted with the local accounting and the local realities in terms of how to look at businesses so that you're not surprised.
absolutely. And then some of the guys from Constellation Software, I believe, moved over to Chapters Group as well.
Correct. So there's
Yeah.
this person I mentioned who's now Chief Operating Officer, Mark Moore, and then there are two people from Topicus who went
Mm,
on to start up their own platform. They just were very interested in, being more entrepreneurial and having fewer, I guess, guardrails around what's possible within vertical software acquisitions. And so they're going to focus on the German-speaking market and, apply a more similar playbook to what they've done, I guess, at Constellation. So it's a group of two. I've met with one of them a couple of times virtually, and then when I was in Hamburg as well late last year, we went for an hour and a half lunch. I basically spent the entire day with the team, the Chapters Group team, CEO, CFO. Went to
oh,
the park with the CEO and his kids, which was pretty cool.
oh, that's
We
awesome.
just get to know the people and what drives them and where they're headed.
And so, what's Jan's big vision? Is he going to go outside of Europe eventually? Like, what's the big 10-year plan?
Yeah, so for now, the plan is to stay in Europe.
Hmm.
The big plan right now is to just clean up the portfolio a little bit more and focus absolutely on vertical software, and just continuously make great acquisitions. So they still see such great opportunities in Europe that that's where they want to focus. One of the things that he talked about, which was super interesting, is no one asks when the numbers match or exceed expectations what went wrong. And that's a
Hmm.
big learning for me at Constellation Software. In one of the quarterly reviews, we were looking at the auto aftermarket portfolio, and so I called the CEO, the PM of that portfolio afterwards to congratulate him. I was like, wow, those numbers are just incredible. And he said, Mansour, this was the hardest time in my career. It was harder than all the crises that I've been through, like speaking about the pandemic. All the customers were calling force majeure, and it was really hard. Like you had to really gather the teams. Everyone was working from home. And I was like, but you still delivered. He was like, yes, but you don't see what went underneath the numbers. And so that was a great learning for me. And so Jan said something different, something similar in that regards. That numbers are great, but it was a collection and hodgepodge of a lot of businesses just because of how fast they have
Hmm.
grown. So Chapters is only a year older than Langdon in its new form, and they have about 45 business units and I think 6 platforms. So it's grown really fast to the point where they haven't really taken and had the time to think about optimizing and making sense of what they have. And so that's a big reason why they brought on this chief operating officer
Hmm.
from Constellation Software. And then I guess there are other people within Danaher who are also helping, making sure that they have this really, really well organized manuscript, just to make sure that they're building something that's very scalable. So I think
Absolutely.
to make the 10-year vision happen, that's something that's absolutely necessary.
It takes time to digest those acquisitions. So, here's a question for you as a follow-up to that. Name a company that you initially selected for the portfolio, but you really had to defend it over, let's say, a 3-year period, 4 or 5-year period. It turned out to be a winner, but it was probably really volatile. You probably had to convince Greg, hey, well, let's keep it in the portfolio. Is there a such example?
A company that didn't make it in the portfolio?
Well, that made it in the portfolio initially, but maybe the performance didn't play out as you expected. But you kept on pounding the table to say, hey, we should keep the position. We should even add to the position. They're going through some short-term pains, and then ended up being a really good winner for Langdon.
Yeah, an example of that would be Esker. So it's the French software
Mm,
company I was talking about earlier. They provide software for like the office of the CFO. So think like back office, finance, procurement, accounts receivable, accounts payables, order to cash, procure to pay. I'm saying a lot of buzzwords, but hopefully that makes some sense. And so the company has EBIT margins in the range of 14 to 15%, and that's pre-capitalized software expenses. So the real cash margins are quite lower than that. And so having to convince both the secondary Isaac and also lead investor Greg that it was still a worthwhile investment. And part of the reason is because I just saw that the underlying profitability was just significantly higher than where the company was. So that's part one. But then the question became, sure, it's possible, but are we going to be able to observe that within our holding period? And so that was the challenge that basically the team gave me. Are we going to see that margin expansion? Is that basically our angle on the company? And so I went back, studied the history of the company, and it turned out that they had gone through some periods of existential pains where the business could have been a zero in its prior existence. They basically had to, in a matter of 2 or 3 years, build an entirely new software company, which then became Esker. And so they were almost constantly innovating by fear of going through that again. But there was historical evidence of the company right-sizing the cost structure. So there's that. The second aspect is, as the company's margins were constant, it was super clear that they were constantly reinvesting in creating new teams. So a new customer success team that cost, I don't know, like 6 or 10 million euros, and just being able to speak to them and count the number of employees within new departments that were newly created. A lot of income statement investments, yet the margins were constant. It just proved that, the underlying margins of the business were higher. And then the other aspect is just simply the timing. You could call it unit economics, just given the sales cycles. So you typically have a salesperson that you hire on day one, right? And that person may take 6 or 12 months to fully mature. And so when that person finally makes a booking, that person gets incentivized directly on the bookings. And those bookings take another, 6 to 12 months to monetize in terms of consulting revenues before you can start earning SaaS revenues. So those would be kind of longer paybacks, but that also is a trade-off in that it's extremely sticky. Like their churn would be something like 2 or 3%. Very, very sticky software with a lot of pricing power as well. And so as the business is growing and generating record bookings, you obviously have those income statement reinvestments, but also that payback changes, the unit economics. And so it was very clear speaking to them that was the case. But then also the company press released one day saying that they were going to pause hirings within sales. And that just means almost automatic margin uplift. So being able to piece that out, speaking to them about how many people are thinking about hiring and in which countries, in which divisions, and how many would be quota carrying and the reasons why was just very, very revealing for us and made us more comfortable. And so we just decided to increase the size of the position at the time. And given that they got acquired recently by Bridgepoint, which I think they got a pretty good price for that, to be honest. Mm-hmm. So did we? It was an okay price. Turned out to be a pretty good investment for Langdon.
And now you got to go out and find the next Escor, right?
Yeah.
And that's the challenge.
That's the challenge. But
really
that's the fun as well.
Yeah, absolutely. So let's hear more about your discovery process and what companies you look for when you are in the hunt. How many small cap tech companies you like to have in the portfolio? Let's hear more about that.
Yeah, so I guess within our investment universe, we all are generalists in our regions, and then I guess sector specialists elsewhere. And so the way we think about tackling this massive universe of small caps is, like I said, we don't screen on output, but we do screen for a few criteria. So we only do developed countries. We screen for liquidity. We also screen for sectors. So 75% to 90% of what we do is going to be in software, consumer, industrials, and non-bank financials. Mm-hmm. And then we also don't want companies that can be affected by government policies, foreign exchange, commodities, things of that nature. And so we really try to focus our efforts on, I have a colleague who says it best when we meet companies. He says, we're going around the world looking for the 30 best businesses we can find and try to own them for as long as we can. So that's in essence the idea, but within the universe that I just described. And so oftentimes when I'm traveling, let's say I'm going to Finland, for instance, I'll just look at every single company that fits that criteria and try to meet them all, essentially. And then oftentimes I'll also meet with local investors, like local private equity companies, local real estate investors, real estate developers, just because you get to learn so much about local realities by meeting them, and then other successful local investors as well.
Interesting. Do you find, Mansour, there's a common group, like we have this in Canada. In Europe, is there a common group of hedge fund managers, mutual fund managers that, you know, this is their only focus, small cap tech in Europe, that you can kind of, look up publicly their portfolio and you can kind of, maybe clone and borrow some ideas from? Does that exist, and what are these funds?
It does exist in Canada. Unfortunately, not so much in Europe. Like some of them will
Uh,
focus on, Sweden only or Nordics only.
hmm.
There's a fund that focuses on the industrial serial acquirers only, which is pretty interesting. So you could look there, but it doesn't exist to the same extent. Unfortunately, I haven't found one. So if any of your listeners has one, please send them to me. I'd love to meet them.
I think the European do-it-yourself investors are probably checking up on your portfolio, right, Langdon, to, to get ideas now. Um, what are some other companies that you're really excited about? Maybe you can walk through like the most recent addition to the portfolio, and you can kind of walk us through that stock selection
Yeah, I mean,
process.
we're still building conviction in that most recent position.
Hmm.
I'm happy to talk about it next time, though. It's a very interesting company, very interesting case. But I guess one that's been in the portfolio for 2 years now, I believe, is a company called Hypoport. I'm not sure if you would have heard of the company.
No.
So it's a company that Greg's been following for several years, and in 2022 the share price went down, I think 70% or higher. But essentially, what the company is they provide a marketplace for mortgage advisors in Germany, connecting the banks as well as people who are interested in purchasing a home.
Hmm.
And so, for historical reasons, Germany has a lot of banks, a lot of financial institutions, like thousands and thousands of banks. And if you want to buy a house in Germany, typically you would fix your mortgage for 10 years and you won't refi before. Otherwise, you would pay really high penalties. And then
Hmm.
there are some other idiosyncrasies around products that help you save, etc. And so, if you're someone interested in locking in an interest rate for 10 years, and there are thousands of banks to choose from, wouldn't it be great just to have a place where you could go to and basically see a menu of real-time interest rates exactly for who you are as a person? Like if you're a doctor and this is how much you earn in this region and this is your credit score and these are the savings products that you have had over the last 10 or 15 years. Here's your family's banking history with this bank. Here's the house that you want to buy. All the configurations and the valuation. What interest rate would which bank offer you? And what's the probability that they're going to approve that mortgage? So that's exactly what they have built. And today, about 32% of all mortgages in Germany go through their platform called Europace. So that would be the core product. They have a lot of businesses, but that would be the core of Hypoport. And the monetization is volume based. So they take 10 to 11 basis points. So call it like 1 basis point per year on the mortgage amount, which is extremely low when you compare that to other kind of similar businesses globally. And that's something that's very specific to Germany in terms of how it's structured.
Hmm.
And so for several years, it was just a very stable market in Germany. People buying homes, just population growth, a bit of immigration, a bit of pricing. And they were almost SaaS-like revenues, so it was trading at a multiple of revenues. And then when interest rates went up tremendously to 4% and higher, people realized, oh wow, like this is different this time. So people just paused on buying houses and construction and anything real estate related in Germany.
Hmm.
And so revenues went down tremendously, so did margins and cash flow. And so really high quality company. What we did at the time is, like I said, Greg had been following the company for a while. We did a bunch of work, met with them virtually, and we flew to Berlin to meet with the founder. And I think what was supposed to be a 30-minute conversation turned out to be a 2.5 hour
Oh.
meeting, just speaking about how he feels now and speaking about how he's thinking about de-risking the business coming out of this crisis. And it was trading at a valuation where basically if you thought anyone would buy a house in Germany over the next 10 years, like, you would have made money. It didn't make any sense at the time. And so we flew back. We made an exception in the sense that typically we go through the whole funnel and write a full investment memo before making the investment. But this time it was just too attractive, and it was a business that we had known for a while as well. And so that turned out to be great. More recently, we had trimmed the position just because it had not ran its course, but it was trading a pretty high valuation. It's come down again, so it's a pretty volatile stock from that perspective. But the fundamentals aren't as volatile as a stock, and so we just take advantage. And so a couple of months ago, we increased our weight in Hypoport. Still founder-led. He owns 30% of the business. He's a very impressive entrepreneur. And then there are some other businesses within the company, like a mortgage broker, mortgage advisors, a valuation appraisers services that's going through a period of challenges right now, ERPs and other software companies for savings banks and cooperative banks in Germany.
Interesting. Well, thanks for that. After traveling through Italy, I'm curious, did you uncover any interesting small cap tech there? Did you subsequently invest in any Italian companies?
We've added a lot of companies to the watch list, but we haven't made an investment there yet. There's one that we got close to, I guess closer to in the funnel. It's an industrial company, actually. Not technology, but it's an industrial company, quite acquisitive. They're going through a period of challenges just because of like sell-in, sell-through within the world of distribution. And so the company has a new CEO. He's from private equity, very strong track record of making acquisitions. We thought perhaps he would also, make a lot of acquisitions at that company. And so that just hasn't really materialized to the same extent. So we're still watching. Really, some really high qualities in Italy for sure that I'm very excited. Two that I'm going to be doing more work on this year.
Interesting. Are there any compelling opportunities in Eastern Europe, including Russia?
So we would have companies that would have sales in Eastern Europe, but we invest in like the 23 MSCI defined developed countries, and so I can't wait for Poland to finally be included in those countries. But
Yes.
no, we don't.
There's some
look at
compelling companies in Poland.
Absolutely.
There's a lot of talk on X.com, right, about quite a few
Okay.
Polish companies. Yeah.
Yeah, quite a few interesting ones there. And then I have family members in Romania as well, so that would be cool one day, but that's probably years and years and decades down the line.
Tell us about your book that you wrote, How Investing Really Works, available on Amazon. What motivated you to write it? Who's the audience exactly? And tell us more about the book.
Yeah, so I have 3 younger siblings. One of my younger brothers was at the time during the pandemic, like a lot of people, looking at others making a lot of money in cryptocurrencies.
Yeah.
And was asking me a lot of questions on, crypto and investing in GameStop and things like that, which I thought was super interesting because he's still back home in Senegal. And for me growing up, I didn't know what the stock market was. And so he's a lot more advanced than I was. And so I was just like sending him books to read, The Intelligent Investor, Common Stocks and Uncommon Profits, things like that. And so it just didn't spark any interest in him. The books were too thick. There was too much jargon. Like he's not passionate about it, so he's just not gonna spend the time.
I don't blame him. You know what? It was even tough for me to get through Intelligent Investor. I don't tell many people that, but it's true.
Yeah, like it took me a long time. It's not because English is my third language, but just because like it's hard
not
to
entertaining.
And so at the time, I guess I had downtime as well, and so I said I'm just gonna write something for him. And then as I was writing it, I said, well, might as well try and scale that a little bit more if it's something that I can self-publish. And so the idea was I would write a chapter and then send it to him, send it to a couple of friends who don't have a background in finance or know anything about investing, and really ask, like, does that make any sense? Like the chapter on equity is a chapter on, talking about why investing in high quality companies makes the most sense, thinking about portfolio management. And the idea was just like writing about principles that could apply forever, investing principles that apply forever. So I start out by, talking about this mental image of a compounding machine. So imagine that you're in front of a vending machine, but instead of having drinks and snacks, it's just a pile of cash in that vending machine. So I put in $100 or I put in $10 and I'm able to set the interest rate and I get some money back. And now I have a massive problem because I have the reinvestment problem. Do
Yes.
I put everything back in? Do I put only a portion? Do I take everything in my pocket? And so I do the same thing again and then set the interest rate. And then, taking variables out slowly. Well, in the real world, you can't actually set the interest rate when you're investing
Hmm.
in equities. And when you're investing in fixed income, you have a ceiling and et cetera, et cetera. So just giving, I guess, principles that I think apply for any type of investment, just cash in, cash out at the end of the day, and what you pay for it, was something that I thought I hadn't seen out there after having read many, many investment books. It was either on the spectrum of, you're going to be a millionaire in a week, or it's extremely complicated. And unless you really want to do this for a living, or someone is forcing you to read this, then you won't
Hmm.
finish this book.
That's really interesting. I love that visual of the vending machine. Growing up, what were your favorite books on investing that inspired you to invest?
Yeah, so I would say growing up, I was not much of a reader. Like my dad used to drag me to the bookstore back home and basically almost beg me to pick something to read, and I would read things on like history of mankind, and like it would take me 3 years to finish, maybe. Um, and so, I guess favorite books would be Phil Fisher's book,
Philip Fisher, yeah, Common Stocks and Uncommon
Common
Profits.
Stocks, Uncommon Profits.
Phenomenal book. I agree.
Yeah.
Yeah.
I used to read it like once a year. Like the whole
Yes.
scuttlebutt investing and going, speaking to suppliers, customers, high quality, just made a lot of sense to me.
Yeah.
Um,
I'm trying to get his son Ken Fisher on the show.
oh, that would be cool.
That would be really cool. Yeah, he's got a lot to teach as well. He's running his own investment firm,
Yeah.
as we all know now. Yeah.
Yeah. So that would be a big one. The other, I can name other ones, but I drew a lot of inspiration from reading investor letters.
Hmm.
Um, so, like anyone, probably I've read anything that's been written and anything about Buffett and Munger and
Yeah.
people in that cohort like Walter Schloss, even people like
Hmm.
that. Like one of the great things when I was at Black Creek Investment Management is they had manuals from Outstanding Investor Digest, like really
Hmm.
old investor letters. Spent a lot of time going through those. But nowadays, I think it's mostly about I get a lot of inspiration and learning from just speaking to management teams.
Yeah.
A lot of entrepreneurs speaking to management teams in terms of how they make decisions, how they reinvest shareholders' capital.
Yeah. Do you write the letters at Langdon for global small cap equity?
So Greg writes most of them.
Okay.
Some pieces, when it comes to, for example, companies that I might cover,
Hmm.
I'll contribute, but most of it will be written by Greg today.
Right on. Well, this has been a lot of fun, Mansour. Thank you very much, and I wish you the best for 2025.
Thanks for having me. Great to meet you.
Talk soon.
Bye.